Hey traders, Nick recapping a few of the tickers that we watch. At least they're on my watch list. I'm running through it. Finally got back from vacation and trying to get into the swing of things. I have a ton of trades to share, but there's no rush to do it at all-time highs, especially when the all-time highs are in contention. All right, since I have you here, this is the live trading, by the way. This is the ES. That's the S&P minis. It's basically the SPX. Today, remember 2465 was my target yesterday, and then 2472 was my next target. So they hit 2465 yesterday, and they hit 2472 overnight. But I said I want to see it during the during market hours, and they haven't been able to do that. And they fell to 2465 and a little bit lower, which was yesterday's range target, I should say. So that's why I'm saying it's in contention. Apple's gone ballistic. It's up 1.4%, 1.3%, which accounts for all the greens and then some from the NASDAQ. So the NASDAQ would be very red without Apple. The very of late, 0.3% red, which is, the proof to that is this guy right here. This is the small caps, and they're minus 0.7%. So the small caps is having a bad day, almost down 1%. Why? Because there's no Apple in it. So I don't want to chase a market that has only one soldier. This is the NASDAQ. Okay, there are a few biotechs that are up. Banks are up, and they're propping up. Well, they were. Never mind. This box was green in the morning, so I guess that's what let go. So now you have a recap of what's going on today. S&P, is in contention, flattish. No, not flat, but really this is a market, the small caps, and they're mostly red, and they're down, 0.7%. Not a disaster, but just the all-time highs are in contention. So I don't want to just start chasing stuff. So let me run through some tickers that I like to watch. All right, let's bring this chart up. All right, and this is in no particular order. I'm going to try to bunch them up. Today there were some reports, and it's the retail sector, like I told you last week. Dick's Sporting Goods, boy, bad day, down 21%. And this is really, I think I have to go back 5 years and then some to see what happened. This is 5 years or more, actually, the level. So there's no bottom to be caught here. The whole industry, and this is one that actually people had hopes because all their competitors are out of business. They're the only gig in town. There's no reason for me to catch this falling knife here. It should have done better, but they missed on everything, I think. 2 or 3 metrics, maybe even 4 metrics. They missed on everything. And then they said they're going to spend more money, I think, on marketing or something like that. COH also down, I think, last time I checked was down a lot, 13, 14%. So COH, we tracked it. We said it had some potential upside. It lived up to it, but then boom, one candle erases all of it. Again, for the same reason, I don't want to catch this falling knife. Why? Because there's more retail to come. Walmart is coming, and if companies like Lowe's and Home Depot can't maintain a good bid, then I definitely don't want to reach down to trash like all the other fluff. I can measure home improvement projects. I can measure Home Depot. I'd rather go long Home Depot and Lowe's. Home Depot reported, by the way, it's down 3.5%, which took down Lowe's. Lowe's reports, I think, next week. So I don't want to catch them, even though they look catchable. But if you think about it, if between Lowe's at 24 PE or Apple at 18 PE, which you think is better knife to catch? And Apple is at all-time highs. So there's no rush to catch anything. Yes, it rallied after the dip last time, but I don't mind missing $1 or $2 on the upside. I don't want to catch it. If I do want it, I'd sell puts way lower. But as Lowe's reports, Home Depot is going to move. So I guess this one could argue that, okay, you can catch a falling knife. You can even buy debit call spread out for September. And if indeed Lowe's rallies on the news, then this one will rally with it, in my opinion. Okay, so these are two, quote, good retailers getting hammered today. Another retailer. Okay, so between these, catching all the other bad retailers, I'd rather catch this falling knife. What is this? This is Starbucks. That's a company that is successful, proven success. And it's at the bottom end of this range, which I drew it. I mean, it's not a scientific range, but it is a range that's viable, meaning look how many times they defended it, this level. But the danger here is that the markets in general are at all-time highs, and if the market's correct, this one will fall further. So if I sell puts in this one, I definitely want to be lower than 50, lower than 48 even, depends on how far out in time I go. I don't mind selling like January, December and be down here and collect a nice premium for it. But I don't want to fight short term. So another company that reported, I think today, was Automotive Parts, whatever it's called. AAP is the ticker. Advanced Auto Parts, sorry about that. And they're getting hammered. Let me hit it 5 years. These are weekly candles, folks, and this is 5 years, almost 3 years worth of work gone. And what worries me is this candle right here. This candle is a weekly candle, is a big bump. I want to know why the reset and if it's in danger. Because if they want to price that out, then we're talking mid-70s. I'm not calling it's going there, but that is a darn big candle here in 1 day. Let me give you a one year look. That's pretty ugly. This is a falling knife I don't want to catch. Why? Because the headline that caused it to come down here is earnings, but there's another headline looming, which is Amazon. And if you want to see how that works out, you can look into, not AstraZeneca, AZO. AutoZone. You can see what happened to that stock. Okay, and I think the headline may have been here from Amazon. So Amazon is not yet in that field. I think there was talk that it would be. Plus, this is a Head and Shoulders, massive Head and Shoulders that could probably bring 375. Technically speaking, in fact, I'm going to draw it right here. The neckline would be somewhere around here. And this would target, I'm going to say here, not 375. Why did I stop here-ish? Because of this area right there. All right, so this is AAP. Another one I looked at today is CHKP Checkpoint Software. I've never traded it, but it looks pretty interesting level-wise on a 1 year. These are daily candles. Technically, if they break through that yellow line, they can probably hit 112 or 113 or revert down to this level. So it's between 112 or 104. Higher lows, I probably would side with the bulls at this point, but not enough to actually buy the calls. I'd probably sell the credit put spread in it. I'd have to see. I'm doing more homework. I don't just trade something I add to my watch list, and I just added this one to my watch list. Why? It came up in an article as it passed Teva from pharmaceutical for being the largest Israeli company, I think, by market cap. So that's the deal there. Well, speaking of pharmaceuticals, let's jump into Gilead. Go to 1 year candles, daily candles. It's at an interesting level. Why? Because it had finally that breakout from here that we anticipated all along the way down. And now it's at that level of contention. So this is a well consolidated level now, and they're at the bottom end of it, and they're fighting over it. I can't trade that. I need more information. I don't have any edge. If I trade it, I'm hoping this way or the other. I need edge, meaning a little more information that can help me sway me with this way or another. Exxon, I'll zoom out in time. So it's hit the technical target, downside from that. I don't mind being long it at 70 for, say, December puts. And I can hedge them by cheap penny puts in between sacrifice puts, say for September. So in case markets crash, I'll be completely protected. I think I've shared that trade before, and they're all still viable in my opinion. In my hands, I'm comfortable with those. I think J&J, I also looked. Boy, I didn't mean to do that, but we're into the same theme. But this one is tight. It's getting tighter, meaning higher lows, lower highs, but also a level of contention. So for added interest level. So coin flip from here, which way it wants to go. I can tell you it's coiled. I can tell you it's going to move. Which way, I can't tell you that. It will be market dependent. So 130 versus 136 in my opinion. So we'll see which one comes first. Not enough for me to trade it at this point. Hopefully it's 130. Then I can go long it by catching that falling knife. Probably selling puts down here or lower. Depends on how far out in time we go. Plenty of trades to share. I have them all in the chamber. I just don't want to shoot them out and then the next day we correct. I will see when is a good day to share some with caution this week, but If you have any trades specifically you're looking at, let me know. We will discuss those. Nick signing out. Before we sign out, let's look at the market, and you can see how it's back to 2465. So they're in contention now, boom, 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 bumping along the line, and Apple's still on crack. All right, now signing out.